Happy Friday, traders. It is 8 a.m. Chicago time on Friday, the 17th of May, 2019. Thanks for joining me yet again to finish up this week. An interesting week for sure. Buenos dias, bonjour, guten tag, buongiorno, and all that good stuff. Salam alaikum. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall sentiment is risk off. We are starting out pretty much the same way we did yesterday, where we had a bit of a rally on Wednesday, and we took some of it back. Actually, it wasn't yesterday, it was Tuesday. We had a rally on Tuesday. We opened up on Tuesday around 28, 20, 22, 23, I don't remember. And we pushed to 28.53.75 to sell off just a bit down to about 28.36. And then Wednesday we came in and we opened just below the low, tested down to 28.15 and pushed up into 28.58.75, a key figure in this area. And here we are trading right around that 28.57, 58 area. Same kind of chart, same kind of scenario on the S&Ps. We'll look at that in a second. Overall, the overnight inventory short, we're looking at a market that is definitely risk off. And let me look at the tally. The DAX is the laggard this morning, down over 1%, 129 points. The NASDAQ follows, down 79.5 points, or 1% as well. And then the Russell, the Euro stocks, the Dow, the S&P is down 22. And interestingly, gold is down $1.40, which isn't too much for that product. Crude oil, one thing to note is that crude oil is now trading July, the official symbol for crude oil now for the front month, which is where you'd want to move to. And if you have positions, you might want to roll. The front month is CLN9, or CLN as in Nancy 19. That's the front month in crude. The difference in price between June and July, so you can adjust your lines or whatever, is plus 19 cents, plus 19 cents. So crude, again, leading the pack today, up 27 cents or 0.44 from settlement. And so this is where we are. In terms of what's ahead, we've got Michigan consumer expectations at 9 Central, 10 Eastern. So this is the prelim number. This actually is a mover. The final number tends to be kind of tame. But the number today at 10 Eastern for Michigan sentiment is expected to be at 97.5, and it's likely to move us. After that, we have Fed's Clarita at 1:40, and then Fed's Williams at 2 p.m. And not seeing that as a big thing. In terms of what's going on here today, there really isn't. The Chinese stocks plummet. As China state media reported, China may have no interest in continuing trade talks with the U.S. for now, sees little sincerity in President Trump's approach. China's NDRC reiterates trade friction's impact on Chinese economies under control. Domestic CPI and PPI growth to stay stable in the future. Pork prices stabilized and declined month on month in April. So that's what we're seeing here. Basically, the Chinese are taking trying to take control of this situation by stating that they don't think talks will continue. So this is what the market's responding to. It's been trending down all night, at least my time. Here's what was expected yesterday. Yesterday we opened just above. We expect to open just above that 28.5875 on a primary scenario. I did expect it to pull back into the range and come into around 28.50 or so before it starts moving back up and pushing higher into 28.8450. That was a primary scenario that was clearly wrong. The secondary is a push out into 28.75 and then reversion back. I expected yesterday, to be honest with you, that uh, we would likely be sideways. Uh, we would likely be sideways. It was expected yesterday to be a rest day. I expected very little news, and so that's where those scenarios came from. And instead, this is what the market did. It actually had, you can't see it here, but it actually had an open auction type opening type, which set us up for a potential for balance and scenario one, and then it just ripped higher. So here's, I'm not sure where my OS lines are. So this is the opening swing high right here. Here's the opening swing low right on the IB low. So we have a clear open auction in range by a tick, and it's back and forth, and then we see this strong rotation up of 10 points, and that is the shot across the bow to the sellers to say back off, somebody's driving. And as you can see down here, the rotations up versus the rotations down, blip, 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 versus the rotations up. Clearly not a good day to be getting long, although I couldn't pass up the short in the 78 area once that's set up, which didn't work out. Just sat there for a while. The point of control shifted up. We ended up with a flag near the upper end of the day, and it was clear it was doomed once we saw the VPOC shift to the high day at that point. It was likely to take out the high, and then we continued to travel up and travel up and travel up, range extension up, and the market just went into a resting state, a state of sleep, really, after it tested 28.94, which is a stock zone, and then it pulled back to VWAP, tangled with VWAP for a while, pulled back to mid near the close and ran right through it. To pull back to mid here, also ran right through. So not again, not the best of days. I cannot say that this is my kind of trade, but you know, you win some, you lose some, and that's just part of the process here. We can't be attached to the last trade because our performance and our ability to make money in this business or well, to make money more than lose it, is to look at the larger sample, right? You can lose it all in one shot, but you can't make it all in one shot. So it's just the way it is. So from there, let's walk into the overnight. But I want to take a back seat on the overnight for a second and look at what we're doing on the daily. Um, Overall, this is what has happened. The market, the S&P has really pulled back to 2,800. The 200 SMA on a price adjusted basis, on a roll adjusted basis, is at 2788. And what we've done is taken a bounce, and the way we've done it is kind of odd. Like this day here, Wednesday, where we have a bullish engulfing day. This is partly why I expected some rest here today. Generally, bullish engulfing has kind of a higher high, but really a resting day. And we are continuing to push through. We have taken out the 50% fib, on the way back. I think that was around 2879 or so. We've taken that out, and we're very, very close to 2900 from 2800 over the last 4 days. So that's the state of the market. It's actually pretty bullish still. The pullback hasn't been all that damaging. Um, all that damaging. But just remember, you've got to really, this applies to me too. Um, you got to trade what's in front of you, not what you expect to happen. Trade what's in front of you, and then once we see what the market is doing, then we expect certain areas, and that's what the scenarios are for. So overall, this is where we are. It's if you look at these profiles, an indication, a clear indication here. If you look at these profiles, they're very much price discovery profiles, price discovery shapes. They are not profiles that are operating in a manner that would be consistent with a market that is finding consensus and moving. Okay. I don't know. You know what? You're advertising, so you're gone. Um, so there you go. Because these are just really a lot of price discovery profiles, we're going to get these surprise moves, and we're going to get this inconsistent kind of push to an extreme test, push to an extreme test. We get a volume taper, then we turn around, go to the point of control, push to the other extreme test, get an excess or a volume taper, come back to the middle, hold there steady. That's the normal process of price discovery. That's the normal process of the auction. And so that's where we expect the market to rotate, and it becomes much more predictable. Now, the way the market has been testing levels, things like mid VWAP, the stock zones, prior MCs, prior points of control, value areas, has actually been okay, except on these days where it just runs off on its own. These are not the kind of days that are my favorite. These tend to be a lower probability occurrence anyway, except if we're in a Twitter war. So we reopened yesterday in a pretty sideways, pretty typical Asian open, and then the Europeans come in right in here, right in here. We see volume pick up a little bit, and then we continue to push lower. A beautiful tag, a mid right here, it's just underneath mid for continuation. This next move, continuation move down, is a bit of an impulse, and then you have your pullback right, wait, right in there. You have a pullback right to the prior push down low of 61 even, a push to 61.50 just for good measure, and this looks like it may attempt to continue on. So that's where we are. That's where we stand. The overnight volume is about twice the normal volume in the overnight recently, uh, uh, and that's where we are. It's been a long week. Really tired today, so my focus is a little bit dissipated. So, what are we looking at for today? So, to simplify things, before we do that, let's make sure we take a moment. It is like Friday. Please take a moment to find the like button, the thumbs up button on YouTube, and hit that before we move into our current segment or our scenarios. The primary idea for today, given how we're opening here, again, we are subject to geopolitical influence, heavy geopolitical influence. We are right on top of the point of control in the overnight session, close to the overnight low. My expectation is this is likely to push lower, extend this overnight low if it doesn't do so in the next 15 minutes. And then we look for a response. I'm looking for a response back up towards the 2878 area from yesterday. I'm looking for this to present some resistance, and then I'm looking for it to come back and hold here. If not, continue through to the 2900 and possibly beyond. It is Friday, so take that into account. Take that into account. and in your plans. But overall, I'm expecting a reversion. If we don't get a reversion, it's actually a better trade. So if there's further comments from the White House, here's a comment from about half hour ago or almost an hour ago. White House set to confirm up to 6 month delay on whether to impose car tariffs on imported cars and parts today, and that's old news. Um, as well as the Trump administration releases proclamation on EU Japan auto tariffs delay for at least 180 days as expected, orders negotiations. Uh, and so this kind of feed this kind of feed coming out today just kind of throws a wrench in things. The secondary scenario is an immediate response, but if that immediate response fails and pushes back out, this is the better opportunity. We're likely to see a fall right through this profile back here. This would be the template day on Wednesday. We're likely to see us come all the way back down to the 2820s. If that happens, it is the better opportunity, the better payday, in my opinion. Then you have scenario three, which is open test down, drive up for a bullish engulfing day up to 29.15, which is a key figure from 2 weeks ago or so. 29.15 would be the target. So scenario three would look like on news, I would be targeting 29.15. Scenario three would be to test down, drive up, and then continue to push higher. And then the target would be 29.15, the 29.15 area, which is actually down here. That would be scenario three. Scenario four, open test higher, drive down. If that happens, we're looking at 28.12 as the potential target below. Okay. I know that's a lot to digest, but it is trading. Just make sure you're prepared for whatever happens. And don't forget that it's Friday. The goal here is to survive today to be here tomorrow. If you don't have your own survival as the primary objective, and that doesn't mean trade in fear. If you're trading in fear, that means you're over leveraged. You should be trading a smaller product, or you should be practicing more. But overall, once you see what you need to see, you need to act, and your execution needs to be flawless, right? Without flawless execution, then you're just wasting time. We're all just wasting time. We're just sitting around doing homework and pretending like we're trading. So overall, it's really about if you're not focused on your execution, you're really not accomplishing anything. Your execution needs to be as error-free as possible and simply responding to the inputs that you need. You see a certain setup, you take it, period. There's no additional thinking there. Good luck.